Tata Motors is set to report its quarter results tomorrow. Now, the lower RM costs and cost control measures are likely to aid the auto majors' margins. What else is the street really penciling in? My colleague Shrishti is joining in with all those details. Over to you, Shrishti.
Yes, Tata Motors will also be in focus on the back of the earnings, because do remember the sales were actually 7.5% up on a sequential basis, and this time India business performance has seen a mixed bag because the commercial vehicle volumes were up 3.5% YOY, while the passenger vehicle volume fell 3%. And the JLR sales as well, we have seen in the quarterly update, wherein because of the plant shutdown, the JLR volumes were impacted a bit as well. So all in all, we are expecting a decent set. Talking about the margins and the numbers that you need to be tracking, so JLR EBIT margin is expected at 7%, which is actually lower than what the company reported in Q1 FY24 at 8.6%. Though we can see an expansion in their India CV as well as passenger vehicle EBITDA margin. CV EBITDA margin expected at 10.8% and PVA EBITDA margin expected at 6.7%. Given the operating leverage, the cost efficiencies as well as the improvement in the segmental volume, we can see the margins getting a bump up, but definitely the JLR cash flow will also be a key to track, because the company has already said that they are presently expecting a positive free cash flow of around £300 million for Q2, so update on that will also be tracked upon. Talking about the numbers quickly then, onto the revenue figure, we are expecting 1,76,087 crores onto their top line, EBITDA expected at over 14,000 crores. Consolidated margin we are expecting at 13.2%, almost flattish on a sequential basis. And onto the profit figure, 4,315 crores is the expectation, and that will be a jump on a quarter-on-quarter basis of 40%. So that's the expectation of Tata Motors. All eyes on the numbers.